Smart money versus dumb money. That's right, guys. We're bringing back a popular indicator to have a look at what everybody's doing right now on the markets. And with inflation data coming out in less than 24 hours, we need to talk about this and, of course, the advanced decline line decreasing on the major indices. Should we be paying attention to how everything seems to be going backwards? Well, today we take a look at the put walls, we look at the options flow, and, of course, some of the largest dark pool activities that we've seen over the last 24 hours. And the results may surprise you where they are. Also, Tesla hits our first resistance. Can it get through it? Gamma squeeze still underway. Gold makes a big resurgence, one of our favorite metals of 2024. And meanwhile, the crypto market continues to seemingly collapse. Is this actually, though, one of the better support zones for the altcoins? Today, we take a look at everything together, including stocks, commodities, and cryptos. Guys, join us. This will be a great one. Well, welcome back, everybody, to a bit of a mixed market. As we mentioned, there are more stocks declining than advancing, yet stocks markets have still been able to hold their highs relatively well. My name's Tom, and we need to talk about semis today, quantum computing coming back into Google, and of course, Tesla's current gamma squeeze. But let's break down smart money versus dumb money. It's been a while since we've looked at this chart, and as you guys know, I tended to bring this in a lot in 2022 and 23 to really show that smart money was traditionally buying every single dip, getting hyper excited when we got those nice pullbacks. Particularly the one in August really saw this exemplified. We, of course, were buyers here on the channel, and many of you guys were out there, and it was probably the best opportunity of the year to get back in. But now we've seen smart money drop off. Is this a concern? Should we therefore be saying, well, wait a second, are we not going to be buying this market anymore? Well, that's when you've got to take spreads into consideration. Okay, yes, smart money has theoretically dropped off from being uber bullish on markets, but it's not like they're traditionally very bearish either. If you actually have a look at these particular sections on the markets, what you'll notice is that whenever we go into these types of spread conditions, we tend to go into a period of stability in markets, usually rallying at a fairly consistent pace and not necessarily seeing that incredible volatility that you would generally expect. Now, do all things come to an end? Of course they do, but traditionally when we've been looking at the data recently, we've already shown, and if you're new here, go back through a few of our videos, the next 3 months and 6 months traditionally look pretty good, at least with the available lead indicators that we currently have. And whenever you're in this type of spread situation, you're usually looking at a more consistent, less volatile market that tends to have smaller pullbacks. And this is something we've argued for a while. People are looking for that big 10% pullback right now. It probably will happen, but it's not likely to happen until 2025 when something like a trade war discussion becomes the real deal. When's that going to potentially occur? Well, after, of course, Trump gets inaugurated. So we're not going to know any of that until later on in January. Make sure to subscribe to the channel. We'll be covering it in great detail. In our last video, we talked about how Goldman Sachs is basically risk on across the board. And we also discussed the idea that when you have consecutive declining stock days at all-time highs, it was pretty rare. And we ended up getting this number to a point where we've only ever seen it during 1928 and right now. But if you look at some of the other periods of time, what you might notice is a kind of ending pattern that generally takes us for the next possibility of even the next year or even 18 months through, but tends to be filled with mostly bullishness. Now, this is what we call the last third of a bull cycle. And it's the kind of feeling that we're starting to get here. And we've been talking about all of 2024, that by the end of this year, we were going to be in the last third of this current run, and that you will need to start paying attention more to the markets as everybody else gets FOMO. So what about when you get 6 days of advanced declines going down? Basically, everything is looking like there's no breadth in this market. Now, it's not all at all-time highs, so it's a little bit of a different stat, but we can actually go through history. And you'll notice here that we've got a little bit of history here provided by Optima, and overall, it kind of is inconclusive. I mean, what you'll usually see is that when you get these reads, you're generally at much larger pull-offs in the markets. It's very rare to see it at all-time highs. In fact, there's only really one period, which was over here, back in 2000 and funnily enough, 17, just after the elections, and we ended up having a bit of a pullback, but still managing to melt up and go higher. Now, if we have a look at another data set here from Grant Hawkridge, you'll notice that whenever we get these particular reads, again, it's kind of inconclusive. What it tells you is that, yeah, it's rare. It's only ever really been seen once before in this similar situation, and it's not really necessarily a super cause for concern. Now, why do I say it's not a super cause for concern? Well, when you take a look at the Mag 6, which is these stocks here, and you compare it to the S&P 500, it looks like they're leading once again. When you have a look at it on the chart, it's making a new all-time high. Now, that basically means that Wall Street's gone from being in everything to going back into the biggest stocks. And that generally precedes a larger trade. When you see breaks like this is the type of situation that you're often in. Now, you may argue, but wait a second, when we've had all-time peaks here of the mag stocks kind of peaking off, then we've also seen markets pulled back underneath that. This is a breakout. This is after a period of consolidation. So when you get a period of consolidation, then you tend to see a breakout in these. This is exactly where you usually are. Have a look at this. So you're right around here. We move up. The big stocks tend to lead. Then the rest of the market comes. And what happens? The mag stocks start to decline versus the S&P 494. Yet you still see markets moving up. Of all that being a little bit slower because, of course, these make up such a huge percentage now of the S&P. What is it, like 20-something% of the entire market? So therefore, we need to be thinking about this as possibility, the early breadth indicator actually, of a new bull move ultimately. And then we need to be looking at, well, where do Wall Street want to sell this down to? Are they going to get to 6,000? Are they going to get it lower? We'll look at that in just a moment. But remember, breadth does need to be paid attention to if we start to see breadth highs, advanced decline highs that then stick for a long time. If we see like basically a market top off in terms of the breadth across the board has all been at a high months and months and months and months ago, should we be terrified? Yeah, that would be very worrying. And of course, we'll be watching that specifically in 2025 together, won't we? So let's have a look here at December. Do we expect pullbacks at this period of time? The answer is quite simply yes. There is no doubt that this is the best time to be usually seeing these types of pullbacks. And I would say it's absolutely bang on the averages. We're on the 11th of December at this time of recording here in Australia. So we just saw the 10th. Traditionally, we have a few more days of sell-off. And then traditionally, we start to see a lot more gains come back into the market. If you want a different visualization of it, here's one from Grant Hawkridge again, which basically just shows you that the market rallies up a little bit at the beginning of December, usually after the first couple of days. Then it sells off, usually mutual fund related, something to do with rebalancing, divs, all these types of things for the end of the year. And then we tend to see a large rally. Now, traditionally, IWM, small caps actually come through with the goods around here. But yeah, it's something to keep in mind when we're looking at the back end of 2024. Don't be doom and gloom yet. Nothing has really changed. Where the doom and gloom is starting to come in, though, is the crypto markets. A lot of people getting liquidated. In fact, we saw some of the largest liquidations that we've ever seen, possibly new records when it comes to Bitcoin and Ethereum liquidations over the last 24 hours. We'll show you in a moment. Keep in mind, though, that when we've seen these rallies start, we tend to continuously see strength in the crypto market for quite some time. And of course, we believe that we're teetering somewhere in this point here between Bitcoin's initial rally and of course, Ethereum and large caps taking out. Now, we saw some major moves from Ethereum. And remember, the weekly close, we see that as uber bullish for Ethereum. However, pullbacks, not to be unexpected. This is exactly what you would generally think of. You see hype. Everybody was hyped. I'm telling you, I was out in the public a few days ago. Everybody was telling me, Tom, crypto, which coin do I want to go in? I said, do you care? Which one makes money? They said. So absolutely, everybody was just jumping in on anything they could get their hands on. And of course, that would equal usually liquidations. We saw weekly crypto asset flow go upwards to a new record over here. Ethereum obviously was driving that, and we were talking about that heavily. Now, that's important because when you couple that with something like this chart here, which basically shows us that Bitcoin on exchanges has been dropping recently, it tells us that the general market flow is actually a hodl one. And when you look at Ethereum monthly returns, remember you expect December to be okay for Ethereum, which it is so far, and we'll see how it goes. But January, February, March, April, and May tend to be even better. So this isn't to say that the crypto run is over. It just needs to liquidate people. And boy, oh boy, did it liquidate a lot of retail traders. I hope you're not one of them in a massive leverage. I think we're at last count talking about $1.8 billion of liquidation, leverage liquidation over the last 24 hours. And yeah, people were leveraging at the tops. I do know that quite a few people got smashed here, but have a look at the difference in this level of liquidation to other periods in the crypto markets. Now, this becomes important because, of course, when you see that level of liquidation, you need to get fear back on board in markets before you can generally climb the wall of worry. Remember, people are now probably going to lose faith instantly. People have been leveraged out, 20, 50 times leverage in some of these coins. Absolutely diabolical, that type of leverage. Don't do it. And yeah, of course, what's happened is they need to lose, probably buying the dip again. And once that happens, then you probably move up. Again, seasonality, you see here, Ethereum tends to do well. Now, where we tipped off to this kind of happening, we could argue that maybe dark pools in Wall Street's ETFs were showing us the way. You can see here the second largest ever in the Bitcoin 2 times exchange leverage. This was actually the top for Bitcoin. And so far, we've just seen consolidation underneath that level. We also saw Ethereum, which of course was buying way lower, see a massive transaction and a small one just at around the peaks. Now, again, I'm not concerned about Ethereum, and you'll see that later on today's show. But let's go through Wall Street and where they've been moving to recently. We just reported that silver broke out. We obviously talked about this now in terms of the improving movements here in silver and gold over the last kind of 5 sessions. It's been an excellent trade. But take a look at this, even more trading in silver. People are really buying back into silver here big time. And that's probably because it's one of the worst ratios to gold that we've seen in a very long time. So silver getting a lot of interest at around these levels. We have to assume they're buys based on price action. That's a lot of trades going into silver stocks. Now, when it comes to the big stocks, we have been talking about, of course, improvement in breadth. But yeah, we just saw some large trades. Here's MAG's Roundhill Magnificent 7 ETF, second largest trade in the last 2 years coming through right at these peaks. We also saw Apple getting the largest trade on the 2 times bull ETF over the last 24 hours. Now, they could be buys, but whenever you see them at all-time highs, you've always got to say, well, is that a sell? I don't know. We did see some large trades on it last time, back in August, kind of sell-off for Apple, and that led into, of course, this rally breakout. You kind of think this is take profit, but if it's a momentum move-based trade based on the breakout, well, that's a good sign. So I'd probably say let's have a look at what the price action dictates over the next couple of days for Apple. But still, some large Magnificent 7 trades coming through. We have to hope that they are mostly buys. Now, let's go over to the S&P. As we know, advanced decline line going down for 6 days straight. As we know, we already expected that this would be a weakness period for the S&P. Go back through our previous videos. We talk about it in a lot of times. And we kind of expect just a smallish pullback to even what we call a pit, which is a pullback in time. Now, I do think there's further to fall here on the SPY. And the main level that we're looking at is, of course, just underneath the 6K line. You'll see why when we look at the options. Not too much else to report here when we're looking at that chart. When we go to the futures and you look at the S&P 500 CFDs, you'll notice here are the updated options, high and low levels. Notice the low levels just underneath 6K. Now, this level in here is a very good one. It's the daily 20 moving average kind of level. It's a few anchored VWAPs that I like putting on. And of course, it's also that demand, support, resistance kind of area. So a little bit to like around 6K. When you look at the options market flow, it kind of gets better, doesn't it? Look at this. We have a market that is now getting stacked with puts. Over the last 24 hours, we saw, of course, 60-50 become kind of the most stacked put. We ended up falling a little bit below that during the session. Not much, so no one even selling premium or anything would have been that happy with the day. And generally speaking, 6,000 is the line in the sand. Have a look at this. If we move underneath that by too much, let's say we poke our heads underneath 59.60, then all of a sudden you could create what we call a negative gamma cascade effect. Now, we haven't seen one of those in a very long time. So in terms of the evidence on hand coming into inflation, we have to believe that there is a potential to spike as low as 59.60. There is generally a bullish undertone still in markets. And while we've lost the calls on the upside, you guys know that it's very difficult to crack these put walls. So yeah, we'll be looking for the close more than anything else. But if you are still a buyer in this trend, you've got to be looking at the 6K, 59.60, 59.70 area. That area is just where you would have to think the buyers sit at this stage. 6,100 remains a very important call wall. And you can see here when you're looking at the 20th expiration for December, yeah, we still have heaps of calls in the system. So again, the puts here are mostly in 0 DTEs over the last 2 days, and we will be watching very closely at a post CPI number. That's where you'd have to think a buyer will try to commit themselves by the end of the day. Let's move over to Tesla. Well done, Tesla people. If you've been buying this thing and not ignoring everybody else and just basically saying as long as Elon and Trump are still friends, it's all good, all green, all good, keep pushing, positive gamma, then you would have been able to, of course, achieve $400. And that's exactly what we've done. That's very nice. We hit those peak areas of 407. That's fantastic. Again, congratulations. Do I think this market's done yet? Well, I would never bet against Tesla right now, frankly. I mean, PLTR, now that could be a different story with the big sell we saw. But Tesla so far, all green, all good. If we do break through 400 and continue to hold the close, we're only barely holding it at the moment. Then, of course, you can see here 425, 422 becomes pretty big. But it's in positive gamma. The stock's flying. And unless you're a trader, this is really just a take profit for a trader zone. Nvidia, let's have a look. Okay, struggling a little bit. That news coming out of China doing a bit more damage than I would have suspected. Semiconductors still the massive read that we're watching here. Still good in terms of replication, but we do need bid. So semis are going to have to find a bid over the next 24 to 48 hours. It's pretty important that they do find bid here. Obviously, if you're looking at something like Nvidia, it's now currently underneath its major put wall. So by the end of the week, you're going to want it above 138, guys. If it's not above 138, yeah, well, that could start to get a little bit nasty. So we'll be needing to watch and dial in pretty hard on semiconductors based on the current market action. Let's have a look at yields. Yields went up a little bit. That, of course, put some pressure on treasuries, still way higher than where everyone said they were trash. And obviously, this is to be expected. Probably see some consolidation in treasuries now for a little while, and then hopefully it goes higher. Now, in our previous video, we said we'd talk about the skew. Now, traditionally, the skew usually stays between around 100, which you can see down here, and usually about 150. Now, it's pretty rare to get into the 160s, and what it generally shows us is that there's some form of tail risk. Now, that could be tail in terms of massively bullish, but a lot of the time, you're usually seeing this actually having an undertone with markets actually falling or kind of like a very large move on the horizon. Now, here are the other reads that we got for such high readings. So you can see here, this was skew 160-ish. We were at an all-time high. We pushed higher, big move moving on there. Pushed higher over here. This one here also pushed higher. So again, these aren't necessarily all bearish signs. Pushed higher over here as well. And then if we go back through history, again, got it and we pushed higher. And ultimately, you can see kind of that's the way that you're seeing the skew hit here. And generally, what I've noticed is it comes in terms of the Fed or something announcing something that's usually relatively bullish or supportive of the market. And we haven't seen that yet, but it could be the interest rates. Maybe it's something to do with the CPI numbers. Yeah, very high skew. Again, go and do your overlays. When you look at these overlays with these high skews, I would argue that it's not bearish for the markets. A lot of people saying, oh, it's going to blow up or anything like that. Again, high skew, I wouldn't really believe it is. In fact, it generally is accommodative, and something accommodative is going to come out. Let's see what happens. We'll keep an update on that. US dollar, sitting in the middle of nowhere. Hasn't broken above the 106.80 and obviously hasn't really shown us weakness yet. Gold bucking the trend and absolutely flying again, 2,700 plus. Well done to gold bulls. You guys know we love gold. Obviously, I'm a fan of Bitcoin as well in terms of, against fiat kind of currencies. But gold is one of my old favorites. I always love gold, and I still think it's going to 3,000. And we've been saying that since 1800. So if you're new, yeah, gold's been one of the best trades of 2024. Obviously, they're better now, but it was the best at one point. Let's move over to silver. Looking good. Silver continues to hold. Obviously, starting to get a little bit slower in its moves. But as I always say, it's best to look at silver-gold ratio. And what this does is it kind of helps you to understand how cheap silver is in comparison to gold, and how eventually I believe we're going to the 0.015. So silver will play catch up at some point. If we do see reinflation, that's actually not a bad thing for silver, because silver is a mostly used metal as well as being a precious metal. So yeah, 0.015, I'm looking for that in the future. That will probably be where I nail silver and say, good work, thank you very much. And I'd like to see maybe even an all-time high on silver by that point. US oil floating around. Very difficult trade in there, guys. Do it if you wish to. More scalpy. Tesla, as we mentioned, 407. If we go back out to history, you're going to see that this is basically all-time high material. Generally speaking, you would expect something like this, or even if you do dump it up really high, you will pull back to it. So I wouldn't say you need to jump on the rally and absolutely rally it up. If you're in Tesla, I don't think I'd do anything. Maybe I'd scale back a little bit here, but it looks pretty good still. Now, semiconductors, as we mentioned, I want bid. Traditionally, I'd buy this area. However, because of the aggression of the market, I always say patience does pay. If you've been starting to get into it, I'd probably wait for a bid before I scale anymore. There's no bid here. And that worries me because I don't like it when markets fall with no bid. So we don't like to buy the dip. We like to buy the V. We like to buy the reaction, that kind of thing. Same thing with Nvidia. We actually got an initial reaction, which was good during the session. Of course, it makes sense for us to be pulling down because the SPY is overall. This level really needs to hold. I like the big trade in here. I have to still assume that big trade was most likely a buy, and we just haven't seen bid. So let's get a bid on Nvidia, bid on semis. We'll see whether that thing holds up. Of course, AMD taking the low and getting punished again over the last 24 hours. That stock is just the worst of the semis. It just always has been for a while now. Hong Kong 50, a lot of people concerned. Oh, it's already given up what it is. Don't worry about it. This actually hit the resistance. That's exactly what you would expect. That is the supply. That is where you should be taking profit if you're a trader. But as someone that's holding for multi-months, I'm not worried about it. There are always going to be weak hands when this happens because they get used to this. So they see this and they think, oh, wow, it's all going to sell. It sells aggressively. What do they all do? They bail. They freak out, yeah? So in this case, I wouldn't worry about it too much. It's pulled back a little bit. What I always like to do is overlay here the pull, and you'll notice it kind of pulled back to a 61.8. I'd like to see it hold that level, no doubt. But yeah, buyers coming back in a little bit here in Chinese stocks, and we'll continue to see. I mean, it's a fight between the PBOC and the market. And as we said, buyers in this area, we're fairly comfortable with those, at least leading into Chinese New Year. Let's move over to the Aussie 200. Still fine, still in a bull market. Yeah, bit of a pullback, but no concerns yet. US 2K holding on very nicely, may I say. So, really holding on there. Looking for another trade in this. Still bullish US 2K into the end of the year. NASDAQ falling off a little bit, which makes sense. Again, reads of overboughtness are there. Watch the daily 20. Where is it? 21.1. Are we there yet? No, we're still higher. So 21.1 would be what I'm looking for. Now let's move over to the crypto market. So, of course, Ethereum weakening against Bitcoin. You might say, but Tom, you said over the next 2 months that you thought Ethereum would beat Bitcoin. Well, of course, that was here. But yes, I still do think that's going to happen. And what's occurring here is, I think, a good old-fashioned flush out. So basically, retail trade is leveraged. Got to freak them out a bit more, then you turn them in. So I don't think it's the end of the crypto market yet. At least we don't have those signs yet on the markets. We did hit into the resistance. We've got an alert for a 0.04 plus breakout here. And we've obviously started to look at different coins. So if you look at something like a Tron, again, one that just ran, not that I like Tron, but let's have a look at it here. What you'll notice is it's almost given up all of its gains, from that big rally. So this is exactly what you want to look at, because you don't expect XRP to give up that type of gain because it's a bit of a better coin, I guess, in some ways. But you can see here that they've all fallen, XRP holding relatively well. And you look at any of these other side coins, they're all kind of getting slogged back to where they were back of November. Now, this is important because it liquidates a lot of people. And you might say, well, that's terrible. That's markets. Markets love liquidating people. That's how everyone makes money. So yeah, unfortunately, this is probably where I'd expect them to start to find a bid. We are watching for those signs. Of course, clearly we're going to be looking at Ethereum closely here. I wouldn't mind Ethereum to take this 3,500 low. So you'll see here you get this initial reactions, very strong buyers. I would say that's actually indicative of a pretty good zone. And then I actually want that level to take the low. And you might say, why would you want that? Because I think it'll liquidate a lot of people. And when that happens, it might even fall into this level here. It's a very good demand around this 34, 33 area. I just want to find a bid. We are going to be hunting for that. So we're going to be using the patience, reaction, predict, don't predict kind of concept. If you're a long-term buyer and you're buying in here, That's not too bad. I mean, traditionally, the daily 20 is a very good zone so far. And we have seen that find one buyer. Obviously, we're looking for a second buyer here, which you usually would expect it. But yeah, not too bad. Now, I always go to Bitcoin and say, has Bitcoin freaked out? And the answer is not really. We know that Wall Street sold up here. We know we're in consolidation. That's A-OK, exactly what happens. You've got to liquidate people to freak them out. The wall of worry is a real thing, guys. And yeah, people get liquidated, but look at that Bitcoin. It's not sitting on exchanges. It's moved off. And that tells me that there are hodlers. And effectively what's happening here is it's a shakeout of leverage. So we'll continue to watch that and, of course, pay attention to it. Now, guys, CPI is coming. It's annoying. It's a stupid day because, of course, this could show reinflation. I'm not sure how to interpret that number yet. And why I mean by that is, somebody's going to tell you, oh, if it's up, we're going to do this. I find those people usually wrong. However, what I would do is I'd say, look, we know where the puts are. We know 6K to 59, kind of 60, 70 is where the puts are. So what we're going to be looking for is a reaction off that level towards buyers. If we see that, that's the better way to start trading things. Remember, trade what they're doing, not what your interpretation is. You're generally wrong, like most people probably are. So whatever this number is, let's ignore that and look at what the flows are doing. And that's why we say if it's in the press, it's in the price. So, that's how we trade news. We don't trade news the traditional way like everybody else does. Now, guys, if you enjoyed today's video, remember, subscribe, check out our Twitter, X, whatever you want to call it, channel. Also follow us on LinkedIn or follow me on LinkedIn. If you're interested, I will be posting there a lot more in 2025 and there'll be some interesting stuff. So I hope you've had a great day. I hope you're okay in these markets. Obviously, the S&P 500 pullback is what we expect. The crypto market, yeah, it's a little brutal, but this is how crypto is, guys. If you're new to it, then expect 20 to 30% like this. Bang. That's what happens. So no concerns yet, no real changes of trend on any of the major good quality coins, and Bitcoin is hodling strong, and that's important. Okay, bye for now.